Alrighty, good morning, good morning, good morning, good morning, guys. My name is Sean Dexter, and I welcome you back to the Mango Grow for a daily Bitcoin and market analysis. A lot to talk about today. Bitcoin getting perfectly supported, bouncing off that key level that we discussed in the previous video. If you guys do remember, we talked about how this monthly support over on the 10 SMA is going to be very, very important. And what do you know? Bitcoin bounced right off it. So in today's video, guys, what we're going to do is we're going to review a few of the concepts that we discussed in the previous video. And in the next video that I'm going to do with you guys, we're going to go over some of the cyclical ideas, right? The higher level, the macro ideas. I'm going to revisit a lot of them with you guys in the next couple of videos. So make sure you don't miss the next couple of videos. And if you are new to the Mango community, make sure you hit the subscribe and hit the notification icon because you don't want to miss the next couple of videos. That mindset, right? Those higher level ideas is what allowed us to capture this move from $17,000 all the way up to $24,000, right? And now we got to prepare ourselves mentally to get ready for the potential next big move that we've been talking about, right? Which is all the way up to $42,000. Target 1 was $24,000. Target 2 is potentially $42,000. So if you want to capture those kind of moves, you got to get mentally ready for it, right? Because how many times you guys have known exactly what price is going to do, but you don't capture the move and then you kick yourself for it, right? It's because the mental preparation and planning was not there, right? The conviction comes from the mental preparation and the planning. So that's what we're going to be doing for the next few videos. Okay, so let's go ahead and get started with the dashboard profile. We do have to talk about CPI as well today, so keep that at the back of your mind. And over here we have for you the 4-hour, the 12-hour time frame, the daily, and as well as the weekly for you guys this week, right? So I've been saying now for the past few days that the lower to mid time frames aren't really presenting a very, very easy trade opportunity or no trade opportunity at all if you're looking at this profile, right? The trend is all over the place, right? You have your 4-hour beginning its uptrend now, but the 12-hour and the daily are not convincing at all. In fact, if you guys do remember, it was around 7 to 10 days ago where we looked at the returns as well as how long the trend has been running across the time frames of the 12 on the daily especially. And we noticed that the daily has been long for around 35 days, the 12-hour has been long for around 37 days, and the returns were really high, right? Like around 35% to maybe around 40%. I don't quite remember. But we said that, you know what, this has stayed long for a very long time. It's not going to be too long before we at the very least see the 12-hour go into consolidation, perhaps even flip into a short trend. Now what we're seeing is the 12-hour has flipped into a neutral trend, but the daily has indeed flipped into a short trend, right? So that long uptrend that we saw on the mid time frames, the 12 on the daily, has come to an end, right? We are seeing it go into an official consolidation, right? And again, going back to our concepts we've been discussing over the past few weeks now, is that when you have your impulsive move on the higher time frames, okay, like your weekly, what you want to see is for your lower time frames to start going into a consolidation. That poses an interesting opportunity to be able to buy the dip and then look for the next leg to the upside. That's your bull flag, guys, right? Impulsive move on your higher time frames and then your consolidation on your lower time frames, looking for the next leg to the upside, which is why I have the weekly over here for you guys to show that the weekly is still in a long trend. So as long as the weekly is still in a long trend, this impulsive move is what we are going to be using as the basis for our bull flag, looking for these time frames over here, these consolidations, the daily going into a short trend, right? Because this downtrend over here of your bull flag is the short trend on the daily. We're looking for that to end, flip back into a long trend, and thus forming the basis for the continuation of this bull flag breaking to the upside, right? But the struggle is when does this downtrend on this bull flag end? When does this daily downtrend end? When does the 12-hour downtrend end? We don't really know, right? It could end here or it could end all the way here. What if this keeps going like this? Well, that's where you look towards your higher time frame support levels. Because again, guys, when you are in a bull market, or if your thesis is that we are going into a bull run, you look for support levels to get supported and you look for resistance levels to break, right? So the thesis, if the thesis is that we are in a bull run, not a parabolic bull run, not a mega bull run, but if we are in a mini bull run at the very least, then at that scenario, we should be looking for our support levels to be supported. And since we are looking at the weekly impulsive move, we should be looking towards weekly levels and monthly levels to get supported, right? And what were we looking at? We were looking at our monthly 10 SMA right over here, right? So if you look at this as your impulsive move, this big candle over here, guys, on your weekly and your monthly as your impulsive move, well, then you can look at the 10 SMA as a guide, not a definitive guide, but as a guide for support of that bull flag that we were drawing out, right? So on your weekly, this is the monthly over here that we're looking at because I want to show you guys the monthly time frame. But on your weekly, you'll have a impulsive move like this, a few candles like this, and then you're looking for your continuation to the upside, correct? Well, where do we get that support for the continuation? We look towards our monthly 10 SMA. Over here, what I've done for you is I've marked out a horizontal right on the monthly 10 SMA. It's coming at around 21,350-ish, and I've gone ahead and plotted the same, or rather taken a screenshot of the same chart on the daily time frame here with the same horizontal, and you guys can see how the market supported the price right off that, right? That's where we bottomed. That's where we put in a local low, and now we're seeing a further move to the upside. Now, does that mean that we're just going to move to the top? Does it mean we're going to go to 30,000, perhaps 300,000 from here? Of course not, right? Of course not. There's still some key levels that we'd want Bitcoin to reclaim towards the upside before we look for that move towards 30,000. That being said, we can use this new information, or rather confirmation of this information of the monthly 10 SMA being respected yet again, right? Yet again. This is not the first time. If you guys remember, 2 weeks ago at the beginning of the month, I posted a video showing, or the name of the video, by the way, I really think you guys should go back and watch it if you did miss it. The name of the video is a simple trading tip to catch easy profits. This was 2 weeks ago, where I essentially drew in a horizontal on the monthly 10 SMA of the prior month. Okay, we had just closed the prior month. We had just closed the month of Jan, but we said that, hey, the market will be respecting that level because as a month unfolds, the 10 SMA is constantly changing. But since Jan just closed, the month of Jan just closed, the 10 SMA for the month of Jan has been confirmed, right? And we drew in a horizontal, and you can see how the market respected to the T before pushing to the upside. Now, using that same idea, we did the same thing again for the monthly 10 SMA, and you're seeing that yet again it has been respected on the daily time frame, right? Over here we're looking at the 1 hour time frame, and you can see the respect. Okay, now I want to touch on a quick idea. When you are trading the high time frames, be it the weekly or the monthly, you need to allow, if your trade is based on the high time frames, you need to allow your position to withstand a move that would be represented by a high time frame move. So for example, if the monthly comes all the way down to around 20,500, maybe even 19,000, and still closes above the monthly 10 SMA, will your position withstand that, or will you get liquidated? If you got liquidated because you're too high leverage, it meant that you were trading the lower time frames, expecting a move of the lower time frames on the higher time frame level, right? That's what it would mean. So if you are trading based on a very, very big position size and expecting a big move immediately, or else you get liquidated, it means you are trading the lower time frames. And you cannot simply wait for the monthly to close to get your invalidation. Your invalidation, your position size, and your time frame all need to be in equilibrium with each other. You cannot just say, hey, I am going to be going 25x leverage. I am going to long the monthly 10 SMA, even though we are in the beginning of the month. Okay. Now, if we are about to close the monthly 10 SMA in 12 hours, right? And then you go ahead and long the monthly 10 SMA with high leverage, yeah, by all means, because in 12 hours, you're going to get invalidated on your trade if the monthly 10 SMA doesn't hold, right? But we are in the middle of the month. You cannot long the monthly 10 SMA with expecting an immediate move while your invalidation being the close of the month, right? Because that just does not make sense. You're expecting a big move, but you're only wrong at the end of the month. think about that for a sec. So I just wanted to get that idea out of the way. Okay, cool. So yeah, I wanted to talk about this video too, but we already did. Go back and watch it. Essentially, we established in this vid that the monthly 10 SMA has been shown respect by market participants, and we are seeing it yet again over the past couple of days. Okay, daily dynamic. Now, this is something else that we talked about in the previous video. We said that, hey, right now, the big thing holding me back from giving credence to the weekly level that we lost. Because remember, guys, yeah, I should have mentioned that too, right? We did lose a weekly key horizontal. However, price was showing support on the daily dynamic, right? And those two were conflicting. So we had the monthly 10 SMA that we just talked about that was being supported. We had the daily dynamic that was being supported, but we did lose the weekly level. Okay, but since the monthly level trumps the weekly level and the daily dynamic is strong edge, the combination of the two allowed me to stay in my positions and also have a bullish tilting towards my altcoins, which I have been accumulating, and they have been doing very well. In fact, I just bagged my first 10x of the season, feeling really good about that. So we talked about how if the daily dynamic was lost, we could look for that further move towards the downside, right? Because while the monthly 10 SMA is support at the moment, we have around 15 to 16 days for the monthly 10 SMA to play out, right? Like price would come all the way down and then still close above the monthly 10 SMA, right? So it wasn't good enough to say that, hey, just because we had the monthly 10 SMA sitting around here, it means that we are going to bounce towards the upside, right? Especially if we have lost the weekly level. But since we also had the daily dynamic supporting us, and every single one of these candles that we saw over the past 6 days was closing above the daily dynamic, that gave us confidence to say, hey, you know what, this is likely going to hold. But if we lose this level, if we close underneath the daily dynamic, then we look for further downside to the next weekly level. But we didn't get that. We got another close above the daily dynamic and then another close above the daily dynamic. And guys, let me tell you that this price action is freaking so similar to 2019. And we've been talking about the similarities of 2019 since the 17K bottom, right? Since we had the impulsive move off the bottom, right? And now I'm sure a lot of people were likely talking about the base idea of that, hey, this looks a lot like 3K, we're going to have a breakout, blah, blah, blah. But there were other things that we started noticing that was far too similar to 2019, like the interplay between the 12-hour 21 EMA into the daily 21 EMA, etc., right? So I have a screenshot over here from the 2019 price action, which essentially shows us the impulsive move. And this impulsive move comes from a long consolidation at the 3K region, which is very similar to our 17K region, right? So we had an impulsive move, then we had an upthrust. We've come down to the 12-hour 21 EMA, which is exactly what we did, had another move, and then we came down to the daily 21 EMA and the dynamic, which is what we did over here in 2019 as well, right? So impulsive move, first upthrust, second upthrust, down to the daily dynamic, right? Which is, again, very similar to what we did. Impulsive move, first upthrust, second upthrust, not as high as 2019, but an upthrust nonetheless, putting in a new high, and then back down to the daily dynamic. Now, this is where it gets a bit freaky. We have consolidation on the daily dynamic over here, where we have very indecisive candles, where the market's trying to figure out, should we break down, should we break up, right? The market was trying to figure out, and this was a bull versus bear battle. And I was on the long side over here. If you guys remember, back in 2019, we have our videos up, right? You guys can go back and watch those vids. But I knew really good traders who were on the other side of the trade over here, where they were looking for further downside, right? So this, you can see it in the price action over here, where the market was trying to determine which direction it would go, until we got this full body candle over here. This candle over here, which was a decisive candle. You can see the confidence in that candle. And then we had boom, right? But look at this, guys, right? We had our impulsive move, right? We had our first upthrust. We had our second upthrust down to the daily dynamic. And then we had 6 candles. 1, 2, 3, 4, 5. And this was the 6th candle before the move to the upside, right? What are we seeing over here? 1, 2, 3, 4, 5, and then 6. Now, Am I expecting the same thing to happen? No. What I do is use it as a guide to understand sentiment and behavior, but our indicators are going to be our line in the sand. Our invalidation points are going to be our line in the sand. And as our indicators give us confirmation that behavior is very similar to back in 2019, etc., then we can start building more confidence in our directional positions. All right. Like Michael Howell would say from Cross Border Capital, it is approximately similar but precisely wrong. If we're looking for market action to be precisely similar to back in 2019, right, you're going to be sorely disappointed, right? Again, I love that line. I just love that line. Approximately similar, precisely wrong, because there's so many traders who try to play fractals, right? They'll find a fractal from like 2012 and they're like, hey, this fractal here matches exactly what we're seeing over here. So now what is going to happen next is likely going to be exactly what happened after this era here in 2012. So yeah, don't trade like that. Use it as a guide to understand human behavior and human psychology. Okay, yeah, let's go ahead and talk about CPI now, right? A little bit of macro to wrap up the video. CPI came out and it came out a little higher than expectations. And a lot of people are confused as to why did the market rally? Why did the market behave the way it did? Well, I want to go ahead and talk about that for a tad bit. Over here, we have the history of CPI going back all the way to 2003. And you guys can see that over the past 2 years, things have been heated, to say the least, right? Which essentially prompted the Fed to initiate its fastest rate hiking cycle in the history of the Federal Reserve, right? It was ridiculous, and risk assets took a beating, right? And over the past few months now, inflation has been coming down, right? You guys can see that we peaked somewhere around here and we've been down. And that was the bigger picture, right? So even though CPI came in higher than expectation, it was still lower than the previous month, right? So while the shorter time frame traders put on trades based on the fear that CPI came in higher than expectation, the higher time frame traders understood the bigger picture and they said, hey, wait a minute, yeah, CPI was higher than expectation, but it was still lower than the previous month, which means that the direction of CPI is still low, which means that over the next few months, if things keep going the way it is, we may actually return to normal, right? So this over here was the small picture and this over here was the big picture, right? The small picture was that, hey, CPI came in higher than expectations. We should go short. And that trade played out, right? The bigger picture was that, hey, CPI is still on its way towards the downside. So we should go long. And now that trade played out. Now, funnily enough, there is even a bigger picture which will say that, hey, wait a minute, CPI is on its way down, but due to base effects, we are likely going to start seeing CPI start rebounding towards the upside in maybe like around 6 to 8 months, right? So there's always a time frame to the picture that you are looking at. And based on the time frame, your trade direction will change. And this idea is really, really important to grasp, guys, because you're going to see a lot of people constantly arguing about the market being wrong, the market not understanding what it's doing, etc., etc. But what you need to understand as a Mongolian is that the market is always correct at that point of time. The market is always correct. Okay, doesn't matter what you think, because if you, for example, if you positioned for immediate upside, and if your trade could not handle a move towards the downside before the market realized that, hey, you know what, we should go to the upside, well, you were wrong. You were wrong. Your trade, your position should have been able to withstand that. Failing that, you should have simply waited for a move to the downside and then gone long, right? If you want to take such a big position size with high leverage that you cannot withstand the shorter time frame traders dumping price action because of CPI coming in a little higher than expectations, then you were wrong. It doesn't matter whether you were right after the fact. You were wrong on your trade because your trade could not withstand that move. And that's all that matters. That's all that matters. So as a trader, as an investor, you need to be able to understand where your trade lies. Okay, are you trading here or are you trading here? If you are trading here and you are putting on a position that may encapsulate this move over here, then your position size needs to be able to withstand this move. You cannot simply expect an immediate move towards the upside. You just cannot. not, right? Similarly, if you are trading over here, you need to be able to encapsulate both of these moves, correct? You need to be able to understand that, you know what, yeah, I'm expecting a bigger move towards the downside in the long run because I'm expecting CPI to start rebounding towards the upside again because of base effects, etc., etc. Well, you got to be able to deal with everything that comes in between, right? So the longer duration your trade is, your position size needs to account for all the volatility between that period, the deviation between now and then, okay? Which is why lower time frame traders can take on much bigger position sizes, right? Because there's less uncertainty that can happen. And as soon as things don't go their way, they're out of their trade. Okay, so yeah, just a quick note on that. CPI came in a little bit harder than expected, but it is still on its way down, and the market likes that in the mid time frame at the very least. All right, so I do have a couple more slides over here for you guys, and I did want to talk about this, but we're already at the 20-minute mark, and I don't want to exhaust you guys too much, so we're going to keep this for tomorrow. Since we had to talk about CPI today, that took up some time, but yeah, we'll discuss this tomorrow because there is something really interesting going on over here, right? Something really interesting that I do want to talk about. We also have the next FOMC meeting coming up in 30 days, and we want to keep an eye on how the market starts oscillating between the opinion on whether the Fed is going to be raising interest rates by 25 basis points or by 50 basis points. At the moment, they have actually dropped their probability for a 25 basis points, and they've increased their probability for a 50 basis points. So that's interesting to see. But again, it's going to be volatile. But again, this is going to be volatile, especially since we had the CPI coming out, etc., etc. Let's see how things settle. That's going to give us information. Remember, what's important is how the market reacts to the news event, right? Especially after things settle down, after the market fully digests everything, like how these numbers change. So yeah, we're going to be keeping an eye on this. Again, if you guys did enjoy this video, please let me know in the comments down below. I've been reading all of your freaking comments, guys. Thank you so much. Thank you, all of you who have been so freaking consistent and regular with your comments. I freaking love all of you. And for those of you who are new, please hit the like, hit the subscribe if you're enjoying this content. I'll see you guys in the next one. Until then, do the mango way, do the easy way. Ciao.